I think this is a very critical point. So if gold breaks below there, then I think we're going to see it hit 3,600 very quickly. I think it'll be a very quick drop. This 4,000 mark, I think, is very, very critical. So for example, like when we look at gold, these blue circles here, this is that 4,000 mark that it really needs to hold. So silver is quite a bit the same. It's dipped down into this support level, these lows. It's had a technical bounce. And it is pointing to lower pricing. And when we look at silver and use the Fibonacci price pattern, silver had its initial drop and then it's had its bounce and it's working through this whole level. Now, there's some interesting levels here on silver. If we take a look, there's this 618 retracement. That's called the golden ratio. That is the sweet spot for Fibonacci theory. What it means is if price sells off and then has a bounce, it's naturally going to want to move to the 618 level, which it did right here. Typically, if you bounce off that level and pause, you're usually going to go down and hit the 100% level, which is this one mark. So around $40 per ounce. So this is the very critical level for silver. Silver really needs to hold 60 or like $61 per ounce. If it can hold that, the long-term bullish picture is pointing to more or less $75 silver, which would bring silver up to about 175, a very big gain from where it is. But if silver breaks 61 or $60 per ounce, we're probably going to see a very quick drop down into this $40 mark, which is a 40% haircut from where it is. So, I mean, either way, there's a big opportunity. The question is right now, both gold and silver are giving mixed signals. Short term, the trend is down. Long term, the trend is up. We've got the dollar at a critical turning point. We've got wars coming to an end, or, the Strait of Hormuz getting figured out potentially. We've got a lot of things shifting right now. And so we just need to wait and see. If silver can hold this level and start to move higher, it will generate us a new buy signal and we can take advantage of the next leg higher. If silver breaks down, I am expecting it to drop very quickly to $40 per ounce, which I believe will be a steal. That is a point where both for gold and silver, I would be moving in and buying a bunch of physical metals. We did close out our metals at 111, way up here, and we're waiting for the market to reset. The market could trade sideways for many years. It could pull back substantially. Either way, I don't want to hold an asset that is at one point short-term overvalued. I'd rather get in later when it is starting to run again, or get in at a sharp discount and reload. That is the whole strategy I focus on around precious metals. So those are the scenarios. Gold and silver have the same scenarios. We're at a major turning point. The question is, do we get long again when it goes a little bit higher and generates a buy signal? Or do we pick it up at a killer deal when the dollar spikes up and we see precious metals get beat up and short-term oversold?
Well, I think the first argument would be, as we saw it today, first, let's understand that I believed a couple of weeks ago there was an 85.15, I called it, that the bottom was in just above 4,000. There might still be a chance to briefly go under 4,000, but basically it was in. We went up $300 in 5 trading days. And now, of course, today's news, just an excuse, understand why it pulled back. The first sign, if I'm correct that the bottom is in, over the coming days, if the stock market does continue to go down and gold no longer goes down with it, then the Grandich that the bottom is in is in. If it goes down as hard as the stock market is, then some of the people that are looking for much lower prices may end up right. Right now, it's hard to tell. But if you talk to me about 6 months or 6 years from now, gold can only work higher. And the simplest reason is this. The people that have the most money and influence the most about money in economies are central bankers. Central banks continue to be net aggressive buyers of gold. They're not buying Bitcoin. They're not buying anything else other people want to claim is good for the future. They're buying it. Plus, some areas of the world, particularly the ones that we spoke about before that I feel is where economies are growing, are continuing to work towards moving away from the dollar and the US and focusing more, call it the BRICS, call it whatever you want, and they're going to use, and they've already stated, in some form, gold. So to me, does gold have risk to the downside? Yeah. Maybe it has hundreds of dollars to risk, but it has thousands of dollars upside over time. And like I said, when there's more reward than risk, I'm in. And the sentiment. I'll say it again. Probably today's decline will fuel even more of the people in recent weeks that said, oh, gold is clearly topped, it's broke. Now the Fed's going to tighten all. The Fed may tighten for a short while, and I'm talking weeks or months, but the Fed can't afford to have interest rates at 8 or 10% because we can't afford to pay that for the continuing cost of higher debt and deficits. So there'll come a point where the Fed will have no choice, no matter what's happening, that it's going to have to cave in and print money again, unless you can tell me, Michelle, that you somehow saw the future and Congress learned how to spend less than they take in. Other than that, I'm going to go with they're not going to see much higher interest rates. So this gold has been trapped. First, it was going to sell off no matter what from the power horizon. Then the war came along and it went down along with it. And now the current trading is, oh, wow, the stock market's down, you got to sell gold. And that's worked up until a few days ago. Now we had a down day. I believe gold sold off into the decline. Now, how we see if it goes, if the stock market does for some reason continue down, that we have the actual peak, if gold can separate itself and even if not go up but not go down, then that bottom that I believe I saw is in. But even if it doesn't, I think the risk at the most is slightly under 4,000. So from today, 3, 4, 500. If there's a 500 downside and over 3 to 5 years still a 5,000 or more upside, which I think is there, I do think in my heart of hearts, and I was not someone that said this as late as 3 or 5 years ago.
This is the daily chart of gold. Let's just zoom back. As you can see here, we did have that precipitous waterfall really started to, I think, test investors and precious metal holders of what is going on and is gold going to break down and sell off in a big way. If we look at gold and just kind of look at these recent lows, we've got a lot of consolidation through here from late 2025. And then we had a wick low over here where we got into a huge waterfall sell-off, volume ramped up, and then we tested this low just about a week ago. And so this is a very big test. Now there's a couple of scenarios here. Obviously, right now gold is in a downtrend from a short-term standpoint. So if, as a short-term trader, gold is making a series of lower highs, it's making a series of lower lows, and it actually is still pointing to lower pricing. Now, the flip side of that, as a long-term investor, the long-term trend is actually bullish. We've got a very strong uptrend. It's consolidating, meaning it's pulling back in somewhat of a controlled manner, building what could be a launch pad, a bull flag pattern pointing to higher pricing. And so depending what gold does here, and silver is very much similar, there is a very big move pending. And so if we were to look at the bullish and this scenario for gold at this point, let's just go back to the ultimate kind of low that we saw back early in 2025. We saw the low in gold. I love to use a Fibonacci extension. This is based on Fibonacci theory, which is pretty much how the whole universe, the world, everything seems to function, based on Fibonacci theory telling us the strength of a move to the upside, and then you can figure out how strong or how much the market pulled back to the downside. It tells us where the market naturally is going to want to go. So from a long-term super cycle of bull market in gold, if gold can hold these levels, we are going to see gold on the next major rally go up to about $8,600, which is pretty darn exciting. That is where this whole super cycle in gold is pointing to. One big final euphoric move. Probably something in the world is going to fall apart. Who knows? But there'll probably be a reason for gold rocketing up there at that point. Now, the flip side of that we need to be aware of is also the downside potential, which let's go and zoom in on this. This is what people need to be aware of. The downside potential using Fibonacci based on the most recent sell-off and the bounce that we've had. This tells us where the downside target is for gold. And that level here is about 3,600. So from where gold is right now, Elijah, we could see gold potentially take about a 15% haircut to that level. And that would actually be a bullish signal long-term. A long-term investor, if we see gold and silver come down to 36, this brings us back to a very unique situation, which is right before we saw gold and silver go into that euphoric kind of parabolic move late last year and early this year. And so the market is very efficient. Whoever got in late, if you weren't in metals and you got sucked into this excitement and you bought up here, the market is likely going to test you. It's going to try to shake you out and come back down and put you underwater or put you back to break even and make you want to get out of it. And then it will take off without you. And so the market is, based on the analysis here, is pointing to that's where it wants to naturally go. So I think there's some great opportunity in gold. I think there's potential for it to have a pullback to 3,600 still. Maybe this even happens over the next month or two, and then it rocket higher. But if gold holds these lows, this low that it put in over the past week, and starts to head higher, then we're probably going to 8,600.
I do think a $10,000 or more gold price is possible. And with that, the risk reward now is still bullish for gold, in my view. Same thing for silver. If it takes 3 to 5 years, I tell you when I don't want it. I don't want it in the next week or month, because if we have a $10,000 gold price, whatever transpired in the world to make it, I don't think most of us are going to want to live in that world. But over 3 to 5 years, I think it's very legitimate. It's related to metals and mining. People need to understand that if you want to go and listen to the Don't Worry, Be Happy crowd on Wall Street, which keeps telling people that on these prices,